Shifting gears now to the world of cryptocurrencies, as we so often do. FTX US, the U.S. arm of one of the world's biggest crypto exchanges, has agreed to buy the derivatives exchange LedgerX for an undisclosed amount. The deal will allow FTX US to offer investors of all sizes the ability to trade crypto options and futures under regulation from the CFTC. So could this be the first step toward regulating all crypto trading here in the U.S.? Joining us now is FTX U.S. President Brett Harrison. Let me just start with that question there. Could this be the first step toward regulating cryptocurrencies? I'm not sure why we should infer from this that that would be the case.
Thank you for having me on the show.
Of course.
So already in the U.S., there's already a regime for regulated derivatives under the CFTC, and crypto derivatives are included in that. So already on the CME, on ICE, on LedgerX, there are regulated crypto derivatives products like BTC and ETH, quarterly futures and options. And us entering in this space is no different from that existing regime.
Does it lead then, could it lead then to more regulation of the trading of cryptocurrencies themselves as opposed to the regulated trading of derivatives of cryptocurrency? I guess is really cutting to the nub of the question there.
Sure. So it's an interesting question about how will spot cryptocurrencies be regulated in the future. Now, right now, there is no existing regime specifically for spot cryptocurrencies.
Right.
FTX US, for example, we're a FinCEN regulated money services business, but there's no similar framework for regulating crypto exchanges the way there are for equities exchanges or options exchanges. So it'll be interesting to see where we head in the future with the SEC, the CFTC, some split jurisdiction between them in terms of coming up with an actual framework for cryptocurrencies and how that might relate to the existing derivatives regimes that allow people to trade things like crypto futures.
So I was surprised to learn, I mean, maybe I shouldn't be, maybe it's just my innocence and naivete, that the vast volume of cryptocurrency transactions or trades are in the options and futures, the derivatives market. By what, as
That's
opposed
true.
to in the spot market? By a factor of what, Brett?
It's by at least a factor of 2 or 3. But similarly for the, in equities and equity derivatives, it's a similar story there. Think how much S&P 500 futures trade. Derivatives are an excellent vehicle for hedging, for capital efficiency. And there's no difference than that, in the crypto markets where, people might want to have exposure to this asset class without needing to actually, hold spot cryptocurrency in either hot or cold wallets and deal with direct either ownership or transferring of spot cryptocurrencies. So they sort of make sense a lot as an asset class in this field as well.